My friends, what's about to happen starting tomorrow could completely change the way thousands of Australian seniors live, plan, and manage their retirement income. Yes, this is real and it's happening now. 5 major pension changes are officially rolling out under Centrelink, and these updates are not just small adjustments. They are some of the biggest shifts in how payments are calculated, delivered, and boosted for seniors and pensioners across Australia. For many of you watching right now, whether you're already receiving the age pension, disability support pension, or carer payment, what's about to start tomorrow morning might mean extra money in your account, new eligibility rules that could include you or a loved one, and long-term improvements to how Centrelink supports older Australians. So please, if you or someone in your family relies on the pension, watch this video all the way through, because I'm going to explain every one of these 5 major changes in simple, clear language so you know exactly what's happening, who qualifies, and how to make sure you don't miss out. But before we go further, please take one quick moment to subscribe to this channel if you haven't already. That's the best way to stay updated on every major Centrelink payment, pension increase, and government decision that affects you. We share verified updates daily, explained in a way that's easy to follow. So go ahead, hit that red subscribe button, and turn on the bell, because tomorrow's payments will begin, and you'll want to know the moment they arrive. Now, let's begin with what's actually changing, and why this particular round of pension updates is being called one of the most significant in years. In Australia, millions of seniors depend on their fortnightly Centrelink payments to cover basic living costs, food, rent, utilities, and medication. And with prices rising everywhere, from groceries to electricity, every extra dollar counts. That's why this new government update is so critical. It's not just another policy announcement. It's a direct response to the growing cost of living crisis and the pressure that many retirees have been feeling for months. The government has officially confirmed that from tomorrow, new payment rules, higher thresholds, and adjusted rates will take effect under the age pension and several related benefits. These changes affect how much you can earn without losing payments, how assets are assessed, and even how supplement payments are delivered. For many pensioners, these new rules could mean more money staying in your pocket, less pressure dealing with Centrelink paperwork, and a smoother process for getting support when you need it. Now, let's go through each of these 5 changes one by one, starting with the one that most seniors will notice first. The payment rate increase. Change number 1, the Centrelink payment rate increase. The first major change is the pension payment increase that takes effect from tomorrow. The government's latest indexation process, which happens twice a year, has been applied based on inflation and wage growth data. But this time, it's not just an ordinary adjustment. Due to rising living costs, the increase is larger than usual. From tomorrow, the age pension base rate is going up. For single pensioners, the new full payment rate will be over $1,100 per fortnight, while couples combined will now receive just under $1,700 per fortnight. That's a noticeable difference, roughly an extra $30 to $50 each fortnight for many people, depending on your specific circumstances. Now, that might not sound like a lot, but when you consider how much prices have gone up, this boost can make a real difference. It can cover part of your electricity bill, ease grocery expenses, or help with petrol costs if you still drive. It's also important to note that this increase applies not just to age pensioners, but also to disability support pensioners, carers, and veterans under the relevant Centrelink categories. So if you or your spouse receive any of these payments, you'll likely see that higher amount reflected automatically in your next deposit. No need to reapply or fill out any new forms. And yes, this increase officially begins tomorrow, meaning that depending on your payment cycle, some people will see the boost hitting their accounts within the next few days. Change number 2. New work bonus and income limits. The second major change affects how much you can earn without reducing your pension. Payments. This is part of what the government calls the work bonus expansion, and it's designed to encourage seniors who want to work part-time or casually to do so without losing their benefits. Until now, many older Australians have hesitated to take small jobs or part-time work because Centrelink would quickly reduce their pension once they earned above a certain limit. But under the new rules starting tomorrow, Those limits are being raised, and for some, significantly, the Work Bonus Income Bank is being topped up with an additional allowance, giving seniors more flexibility. Single pensioners can now earn up to $11,800 a year without it affecting their pension. Couples can earn even more when combined. What does this mean in real terms? It means you could pick up a few shifts at your local store, do some seasonal work, or help out in your community, and keep your full pension at the same time. This is one of the most popular changes among retirees who want to stay active and involved without financial penalties. And if you've built up unused work bonus amounts in your Centrelink record, those will continue to carry over. So it's worth checking your MyGov account or calling Centrelink to confirm how much you have available under this new system. Change number 3, Asset Test and Homeowner Adjustment Now. This next change has been one of the most discussed updates in recent months, and it's finally becoming official. The asset test thresholds used to determine eligibility for the full or part pension are being increased, especially for homeowners. This means that if you own your home, but have savings, superannuation, or other assets, the limit of what you can hold before your pension is reduced has now gone up for single homeowners. The cutoff point is increasing to roughly $674,000, and for couples who own their home, it's rising to around $1 million in combined assets. For non-homeowners, the limits are even higher. This change recognizes that many seniors have worked hard their whole lives and built up modest savings. And it's unfair for them to lose pension support just because they have a small buffer for emergencies. With these higher thresholds, thousands of people who were previously excluded or partially reduced could now regain access to a full or part pension payment starting tomorrow. If you were recently told that your payment was reduced or cut off because of asset limits, it's worth contacting Centrelink again, because these new rules could restore your eligibility. Change number 4, Energy and Cost of Living Supplement Update. The fourth major change starting tomorrow focuses on something that has become a constant worry for many seniors: energy bills and daily living costs. The government has confirmed that new cost of living and energy supplement adjustments will begin rolling out automatically with pension payments. If you're already receiving the age pension, carer payment, or disability support pension, you're likely already receiving some form of energy or supplement assistance. But under this new update, those supplements will now be automatically recalculated to reflect current inflation levels, meaning a slightly higher amount added on top of your regular pension. The energy supplement will now increase by around $4 to $7 per fortnight depending on your household and situation. While it may not sound like a lot, this update is part of a broader adjustment that adds up over the course of the year. More importantly, it ensures that your supplement continues to keep pace with rising utility prices. In addition to this, the cost of living bonus, which was previously a one-off measure, is being extended for another payment cycle, meaning eligible pensioners will receive another lump sum boost in the coming weeks. The exact amount varies by payment type, but for most single pensioners, it's expected to be between $250 and $300, while couples will receive around $400 to $450 combined. The best part is that there's no need to apply. If you're eligible, the funds will go straight into your bank account automatically. Just like your regular Centrelink payment, this update has been welcomed by many advocacy groups across Australia, who have been calling for more direct relief for seniors facing high power bills and food prices. It's a sign that the government is listening and taking steps, even small ones, to help older Australians manage the ongoing cost of living crisis. Change number 5. New Centrelink processing and payment schedule improvements. Now we come to the fifth and final major change. And this one affects how your payments are processed and delivered. From tomorrow, Centrelink's new streamlined payment system officially launches. This system is designed to reduce delays, avoid missed payments, and make sure funds reach pensioners faster, especially around public holidays and weekends. In the past, many seniors experienced long waiting times when their payment date fell on a weekend or public holiday, often forcing them to wait until the next business day. Starting tomorrow, Centrelink's new automated payment calendar will ensure earlier processing, meaning that if your scheduled payment falls on a weekend, it will now be deposited the day before, so you're never left waiting. Another improvement involves the notification system. Pensioners will now receive clearer text messages or MyGov notifications confirming that their payment has been sent, along with the amount and expected deposit time. This simple change will help reduce confusion and unnecessary calls to Centrelink, something that has frustrated many people for years. Additionally, the system will automatically detect if a payment has failed to reach your bank due to account changes, and will trigger an immediate reattempt rather than waiting for days of manual correction. This is a quiet but powerful improvement that will prevent missed payments for thousands of seniors each month. And finally, the government is also simplifying reporting requirements for those who earn income while receiving a pension. From tomorrow, eligible pensioners who have no change in income will no longer need to report every fortnight. They'll only be asked to confirm income changes when necessary. This means less paperwork, fewer phone calls, and more peace of mind. Now that we've gone through all 5 major updates, let's talk about how they work together, because the truth is, each change is designed to complement the others. The new payment rate increase gives you a stronger base pension. The higher income limits under the work bonus make it easier for you to earn more without losing benefits. The asset threshold adjustment ensures more homeowners stay eligible for support. The energy and cost of living supplements provide extra relief for day-to-day expenses. And finally, the new payment schedule system makes sure your money arrives on time, every time, together. These changes represent one of the most complete pension overhauls in years, one that touches not just the amount you receive, but also how easily and reliably it reaches you. It's important to remember that every single one of these updates begins rolling out from tomorrow, and most of them will happen automatically. You don't need to reapply for your pension, fill out new forms, or wait in long Centrelink queues. The government has designed this round of changes to be as automatic and seamless as possible, so the money just appears where it should, right in your bank account. But that doesn't mean you should sit back completely. There are still a few important steps you can take to make sure you get every cent you're entitled to. First, check your MyGov account or your Centrelink mobile app tomorrow morning or later this week to confirm that your updated payment has been processed. You'll usually see the new payment amount listed under your upcoming transactions. If your payment seems lower than expected or hasn't changed at all, don't panic. Sometimes adjustments take a few extra days depending on your payment cycle. Centrelink has said that the rollout may take up to a week for all accounts to reflect the new rates. Second, if you were previously ruled out of receiving a pension due to asset limits or income levels, now is the perfect time to reapply or request a reassessment. These new thresholds could bring you back into eligibility. You can start the process online or by calling the Centrelink Old Australians line. It's a quick way to check where you stand. Third, if you're working part-time or thinking of doing so, update your work bonus records. Make sure your income details are correct so you can take advantage of the higher limits without being penalized. Finally, make sure your bank details are up to date. With the new payment processing system, incorrect bank information could delay your deposit. Double-check your account numbers, especially if you've recently switched banks or opened a joint account. By doing these simple checks, you'll make sure everything runs smoothly, and you'll be ready to enjoy the benefits of these 5 major pension changes as they officially begin tomorrow. Friends, I know that for many of you, the past few years have not been easy. Prices have risen, bills have piled up, and sometimes it feels like the system doesn't always keep up with the reality of what seniors face. But this time, these changes, small as they may seem individually, come together to form something meaningful. For the first time in a while, the government is not just adjusting numbers on paper, it's acknowledging the very real struggles of Australia's senior citizens. These updates bring more money, more flexibility, and more dignity to those who have given so much to this country. So tonight, as you prepare for tomorrow's payments, take a deep breath and know that things are moving in the right direction. You've earned every dollar of this support through decades of hard work and contribution. Thank you for watching, thank you for trusting us, and most importantly, congratulations to every Australian senior who will see these long-awaited pension changes begin tomorrow morning. Stay safe, Stay hopeful, and we'll see you again very soon for the next important update.